The Federal Reserve just sent a very weird message. On one side, the Fed just recently claimed that the foundation of the US economy are very strong and there is no need to lower down interest rates. On the other side, the Federal Reserve just recently lowered interest rates by about 25 percentage points. So it led many people very confused. Do we have a very strong economy, or the economy is weakening and it's time to lower interest rate? And it wasn't because Donald Trump has been pressuring the Federal Reserve over the last 6 months. But I have already told you back in July that in September of this year, interest rate cuts are going to happen 100%. Yes. In September, most likely, I would assume that the chances that they will lower down interest rates is increasingly high. Some of you actually left me a very bad comment, but you see, it actually happened. The most important thing is that if you paid a very close attention to what he said, then the situation is way worse than most people imagine, and let me explain why. So the Fed expects that throughout this 2025, it is going to lower interest rates to 3.6%. So we are going to see another 2 cuts by the end of the year. And each cut most likely is going to be about 0.25 percentage points. And then throughout the entire 2026, if things continue this way, and we are not going to see any kind of serious inflation throughout the entire next year, we will see one more cut in 2026. And it's going to be 0.25 percentage points. The exact same projections are for 2027. So the long-term interest rates are going to be stabilized at around 3% for the foreseeable future. We cannot possibly afford to go any lower than that because we are seeing still huge inflation. Inflation this year, according to the Federal Reserve itself, is going to hit about 3%. And after that, most likely, if things continue the way they are, it might actually slow down after that to 2.6% in 2026 and then 2.1% by the end of 2027. But these are so far projections. They might happen, they might not happen, because a lot of things could happen. The Federal Reserve isn't always accurate in its projections. But Jay Powell made one thing very clear, that the US economy is slowing down. So if you compare the first half of 2025 to the first half of 2024, there is a serious slowdown. In the first half of 2024, the real GDP grew by 2.5 percentage points. In the first half of 2025, it has grown by 1.5 percentage points. Most likely, it's because of the tariffs, that these businesses are scared, businesses are not willing to invest, and a lot of businesses are cutting costs. Because if you look at any business expense, most likely in any business, you will find out that hiring people and payroll is the biggest expense. So that's where businesses usually start cutting their cost. In fact, in the first half of 2025, we already had one negative GDP growth, and probability of that repeating by the end of the year is extremely high, because we don't have the data for Q3 2025 and Q4 2025. And if any of them is going to be negative, then we might actually need to lower interest rates further. But that puts the Federal Reserve in a very strange dichotomy. On one side, inflation is rising, so they have to increase interest rates. On the other side, the labor market is weakening and the economy is weakening, so they need to lower the cost of borrowing to boost the economy. So according to the Fed itself, the unemployment by the end of the year is going to hit 4.5%. Currently, it's about 4.3%. And the trend over the next couple of years was very clear that with each year, unemployment is rising. In fact, in June of this year, it was the first time since probably in the last 5 to 7 years that we had a negative jobs report, where the United States has lost more than 19,000 jobs in a single month. And the probability of that repeating throughout the entire year is only rising. We're no longer adding enough jobs. People have been talking about this probably over the last entire year, but now we are seeing the effects that yes, it is actually true that companies are firing people, that companies are very careful with hiring people, that AI rush that we had since the end of 2022 is over. But here is the biggest problem that I don't see anybody is actually talking. When Donald Trump and the Republicans passed the big beautiful bill, the point or the idea behind it was very simple. The United States is facing an existential threat of rising deficit. The deficit is about 6.5%, and that is the main cause that the United States States having the largest debt in history. So either we are going to raise taxes and pay off that debt, or we are going to lower taxes so that the GDP starts growing faster, and as the same percentage of a larger GDP is going to cover the deficit and will pay off the debt. So by passing the big beautiful bill, we have made Trump's tax cuts permanent, and secondly, we got rid of a lot of other taxes such as the overtime tax, the tax on tips, and based on it, the public debt to GDP ratio by 2034 should have gone down to 94%. If we did not pass the big beautiful bill and kept the things the way they are, it would have risen to 117%. But here is the real problem. For this to happen, the White House predicted that the GDP throughout the entire Trump presidency is going to grow between 4.6% to 4.9%. And after that, it is going to slow down to 2.4% up to 2.7%. These are extremely optimistic numbers. These are the numbers from the page of White House. These are the numbers that Donald Trump himself posted. So I'm not coming out with these numbers. I don't want to be accused that you're coming out with these unrealistic numbers. So for this to happen, we need this kind of GDP growth. Now the question is, are we going to see this kind of GDP growth? So if you have listened very carefully to what the chairman of the Fed said, we're nowhere close to that, because according to the Federal Reserve, the United States will witness a GDP growth in 2025 of about 1.6%. By next year, it will slow down to 1.8%. By 2027, it will be 1.9%, and 2028, 1.8%. So throughout the entire Trump presidency, we're not even going to see a 2% GDP growth, leave alone 4.6% or 4.9%. And in the long run, according to the White House, it's supposed to grow to between 2.4 and 2.7%. But according to the Fed, in the long run, it will stabilize at about 1.8%. So we are reducing the revenues of the government, and the GDP is not growing as much as we expected based on our projection, which means that government's deficit over the next couple of years is going to grow, is going to expand, which will force the government to rely more on debt and less on tax revenues, which is going to cause massive inflation. You see, anytime that the government is spending money, you have to understand one most important thing, that is massive inflation. But anytime the government is borrowing money, that is double inflation, if you want to call it like that, because the government is borrowing money from the future and increasing the supply of money of the present, which is causing massive inflation throughout the entire economy. So even though that the Fed expects that the inflation will slow down by the end of 2027, the probability of that happening is going dramatically low, because the government is going to run a much bigger deficit than expected. And these are not my words. These are literally the estimation by the Fed and the White House. What do you think you're supposed to do when you're going to see higher inflation, lower GDP growth, and lower wages growth? If the labor market is weakening, that means that companies are not willing to pay you more. That means that companies are not willing to raise your wages. That means that the cost of living is going to rise while your wages are going to stay. But there's one thing you have to understand. Anytime there is any kind of inflation, it doesn't matter who is causing that inflation. Prices are going to rise, especially asset prices. Yes, your wages might not rise much, but you have to understand one most important thing, that the market is going to skyrocket. The market is not going to stop, because as the value of the dollar keeps going down, the value of the real assets in the market will continue rising. So we might be on the brink of another stock market rally. Even the economy is going to suffer throughout the next 1 or 2 years. Which is why this is your opportunity. I don't want anybody to miss this opportunity. Everybody must be in the markets. Of course, you should not be buying stocks blindly. You have to understand what's happening. You have to understand the valuations. You have to know what are the best stocks to buy right now. And it's not just by listening to somebody. You have to know your stuff, because you're investing your money. And when you don't understand the reasons why you're buying certain stocks, when there is any kind of a catastrophe and a crisis in the market, you are going to sell in the wrong time. So if you want to understand why stocks are valued at certain prices, then check out the first link in the description and make sure that you don't miss this opportunity. Thanks for watching, and I will see you in the next one.